And we are live, another show, FTMIG live on the Midas Letter network. We're here with a new face today, Matt Dyck. Welcome to the show. Appreciate you coming on.
Thanks for having me.
Welcome, Matt.
Because we were, a lot of our stuff has always been surrounded around cannabis and mining, and contrary to popular belief, there's other ways to invest.
Yep.
And an area that we're going to start off with today, and we've got a bunch of different people coming on, by the way, just to go into that really quickly. We have the CEO of Indiva that is going to be making a stop in here. We have the CEO of Providence Gold, a really interesting gold company. They are a client of FTMIG.com. They are just starting up their story, so we got that coming for you as well. And we have the CEO of Empower Clinics coming on as well. So quite a few things, but to the reason you're here, there's a lot of different areas that we've been talking about in the last little while, but one area we haven't been has been real estate. And you've been in this space for quite some time, and we're going to start going over a couple of things about in the GTA, across Canada. What is the state of people buying homes, condos, and everything in between?
That's right. Yeah. Well, thanks for having me, guys. I appreciate it. I can let you know a little bit about myself. I've been in the business here as a mortgage agent for the last 3 years. I've been involved in the real estate industry in the Durham region and across the GTA for about the last 10 years. But yeah, it's an interesting space to be in. It's an interesting time to be in it. Coming into the mortgage world is just when all the rules got flipped upside down, and so it's all normal for me. So from that perspective. Yeah,
and I know I'm right in that generation. Everyone keeps talking about the millennials and how they're not going to be able to afford homes. We've had housing crisis, we've had housing bubbles, we've had all these different aspects. Where are we right now? For those who are looking to invest or buy, what's the real estate outlook in Canada looking like right now?
It's a little bit up and down across the board. If you look from the major cities, obviously Toronto and Vancouver were the hotbeds that everybody was worried about, when the government got involved in changing those rules for mortgages. But Montreal, which was kind of quiet over the last couple of years when everybody else was on fire, they are now kind of leading the way.
Really?
Ottawa is doing fairly well. Toronto and Vancouver have softened up. I think we hit the soft bottom, and it's starting to come back up. Prairies, and you get to the East Coast, it varies depending on city. So it's there's Calgary is really slow. Their market is at a 10-year slow down, I think.
Yeah, I saw that earlier. It's the slowest market last month in a decade in Calgary. They just keep getting one thing after the other right now.
Now you can imagine from the oil sands when that was booming back in those days, and prices are at great lows for people to buy right now there, but people just can't, so the sales have just dried up.
Mm-hmm. See, and that's important, because so many people, like I said earlier, we talk about investing in stocks, we talk about investing, whether it be options, mutual funds, doesn't matter. The biggest investment most of us have is our home.
Absolutely.
And it's interesting to see what's going up. You've got a home coming up soon. And you'll find out now if it's going to keep going up or not.
It's an investment property, yeah.
Yeah. So if you were buying a home, where would you buy one right now? Where is it hot? Where do you think you're going to see the largest increase for the next little while?
Well, I mean, the trend, if anybody from the GTA that's watching, obviously it's always kind of been the go north or go east philosophy, right? And so me being out in Durham region, anywhere from Pickering all the way out to Bowmanville and Newcastle, you can really get into an affordable property out there. So you're still along the lines of commuting into the city, that type of things. I've dealt with a lot of first-time buyers, young couples coming in, and they've gone as far as Quinte, as going out to Belleville to buy a property for $280,000, $290,000, get half an acre, get a 25-year-old bungalow, and driving into Durham region to work. So, I mean, but that's the alternative versus, living in Durham and driving to Mississauga or Oakville or Hamilton or,
I feel like Durham needs an airport.
Well, there's a rumor that we're getting one for the last 30 years.
So farmers don't want to move. No. But no, the airport would really help out, because that would bring more jobs. And that's the most attracting thing about the West End, is the airport, jobs, corporations set up around the airport, and you see your values up there around the airport are higher.
Just need a Hyperloop. We just need a Hyperloop. We need to get Elon Musk out of the trouble that he's in right now. And just, come to Toronto, bore a hole all the way from Muskoka down to here, and then everyone can have their amazing homes out there for a fraction of the price. Even though that's pretty expensive, actually. Muskoka's been ripping it lately.
Yeah, it is.
A lot of cannabis money be going out there?
Yeah, I wouldn't doubt it. I wouldn't doubt it whatsoever.
Let's talk about interest rates, because we're going up. Things have been going up for the last year or so. So how do you see that affecting the markets here?
Should I pull up my NDI and I'll show you right away?
Yeah.
This is what interest rates have been doing to the market, if we can pop it up here. As I think you're saying in Canada, oh, there we go. Red. Everything is red. If you looked at the actual indices, I don't know which one to go here, but it's just going to pop up here. I don't know what's going to pop on the screen. But if you go to the actual indices, you're looking at the Dow and everything, it's getting hammered. Is that because we're expecting interest rates coming up soon?
Yeah, I mean, there was a lot of tension going on with the free trade agreement, right? That was just finally negotiated, which still has time to go through and get passed and implemented, but it looks like it's a done deal. And as soon as that announcement came out from Canada, the U.S., and Mexico, all of a sudden the forecast went from having 2 rate increases in 2019 to 3, possibly 4. Yeah. And then, of course, the jobs report came out in the States, and they're at a record low for unemployment, below 4%. So that automatically is going to expedite, that rate hike by the Bank of Canada. Yeah. We're probably expecting to see one in about 2 weeks. Yeah. So that'll be the first one, or probably the last one for this year, I would expect. Yeah. Yeah.
And I could imagine that, knowing that, obviously, then all these things follow suit. We were having a conversation earlier about interest rates, and just the fact that this year, 2018, was supposed to be 4% global growth, which is like the highest that we've had in the last 10 years since before the financial crisis.
What, in Canada or the U.S.?
In the world. The world is supposed to, on average, be 4%. And when that starts happening, you need to be able to start, one, it's showing that you're in a good state, and you just said the jobs rates, or the unemployment rates, it's one of the lowest we've had in a long time. When you start seeing that, you see this economy, you think to yourself, if you're, the governor, I'm trying to think, I keep thinking of the guy in England, I keep thinking of Carney. Is it Polos in Canada right now? Yeah. If you're looking at him and you're seeing that your economy's doing all right, the job rates are down, and you know that inflation's coming. Because when you start having increases in output and productivity, you start getting this sense where you have to curb inflation. And one of the biggest ways you do that is by raising interest rates, because that's fighting inflation almost 2 years down the road. You're doing it proactively. Right. And if we think we're going to keep growing, and interest rates are still going to keep going up, this is going to keep affecting us like this, but more specifically, for our housing markets, it's going to get expensive.
Yeah, it's that, and it's also there's a couple other factors at play. There's in terms of supply. So housing starts are down. I think it's down 20 some odd % since June. We're on pace for about 188,000 new builds in Canada for this year. And that will be the lowest in years. So normally 200,000 is probably where you want to get to. I just saw an interesting stat that I didn't even know, that Canada has increased their population by over 500,000 this year. So if you take that into account, where do new people to Canada come? Yeah. They come into Toronto, they come into Vancouver, and we already know that those markets are struggling as it is in terms of affordability. Families are spending about 53 or 54% of their household income on their mortgage.
That's insane. So I'm looking for a place right now, right in the east end of Toronto, $2,200 for a 2-bedroom. I think it's like 650 square feet. $2,200. I'm pretty sure your mortgage out in I always get this wrong. Bowmanville. Pickering. Yeah. One of the east. I'm so bad without east. I'm a true GTA guy.
You're a West End guy.
I'm a West End guy, but it's crazy. $2,200. That's a significant amount of money, and it's not anything special. It really isn't. When you're looking for an actual home, how do people afford it?
Matt, how do you factor in the Greenbelt? Because that's really tied up our hands with building too, right? That has to play a role. How do you feel about that?
It's you get a little bit torn if you get into the weeds a bit, but it's all the municipalities are looking at areas where to loosen up the regulations so they can open up some land. One example of where they're trying to do that a little bit, I believe they cut into some of the green belt that runs along the northern part of Durham, which is that new development, Seaton, which is been in the works for a while, right? North Pickering.
North Pickering.
And that's supposed to be a high-end type of development, create a ton of jobs, and all planned out. And they dug into a little bit of that area, which is good. But I did hear, as an example, so local stuff out in Clarington, when you get all the way into Curtis and Boneville, Newcastle, there's something coming up for that council very soon about actually putting more restrictions on greenbelt areas out there.
Yeah.
Really?
So I mean, that's not where we're having the big issues. The big issues are more here in Toronto.
Yeah,
so,
definitely.
Yeah.
Well, let's talk about prices. I mean, how much would a detached cost us in Toronto?
Detached in Toronto. Well, I think the average last month's report came out just over $1 million. But
Just a cool mill.
Yeah, a cool mill
For a house.
And that's down. That's down from way back, 2 summers ago. But it's still, prices are still in the top range that they've been in our history. So it's about $796,000 is the average home price in Toronto, but $1 million for a detached. Now, if you want to compare that, the average price is just under $600,000 in Durham region. Half an hour, 40 minutes east, and you can get a detached for $648,000.
Yeah, it's amazing the difference.
It is.
The smallest, I shouldn't say the smallest amount, there is distance obviously there, but it's incredible where you look at one house, $1 million. Yeah, you take that $1 million and drive half hour, 45 minutes away, and you're getting, is it arguable to say double?
Yeah, I mean, in terms of, you're getting the white picket fence, and you're getting the 3, 4, 5 bedroom house sometimes. You can get your 2,000, 2,500 square feet, and you can stay under 600,000. Oshawa's average is, just over 500,000, and there's over 600 listings right now there.
So for somebody who's looking to invest in real estate, is it a time to still buy a home and go into rent? Because rentals can keep going up as well. Do you find that could still be a very fortuitous place to park your money? Yeah,
for sure. Rentals are a great opportunity. The only thing that has changed is with the initial changes to the mortgage rules back in 2017, and then again, 16, and then this year, that has made it harder, and so rental underwriting conditions by the lenders and through the government have really tightened that up. So what I mean by that is, before you could be an investor and you might own 10 or 15 doors. So as long as you count a door, right? So you could have a fourplex, that's 4 doors, right? Yeah. So now you might cap out with one lender at 4 doors, and you have to go find another one who will allow you to add, more. So once you get your first or second, you want to keep going. Yeah, because I know Winfred actually has 3 rental properties. He's 31. He's been putting a lot of time into that, and that's actually brought him a lot of wealth, was going into rental property. Absolutely. Where a lot of other people, they put their money elsewhere. They put it in their, like I said earlier, you either go into stocks, you go into whatever, you put it into your losing account that they somehow are allowed to call a savings account. It's really interesting because not many people, especially millennials, are looking at houses and saying, I want to buy a house because it's an investment. They look at it, this is a burden I'll never be able to afford. Well, one of the big problems, and I'm not sure if it kind of hinges on the borderline of the millennial age group, and they're, I think the average age we were talking about was they're 29 right now, and first-time buyers' average age is 32. Yeah. So that wave's coming. They are now getting they're getting their promotions, that type of thing. There might still be help from family, from mom and dad, in terms of gifted funds, that type of thing, but they are entering the market. They've been sitting on the sidelines, and they're entering the market. Now, when it applies to rentals, the rentals tend to still be a lot of the ideas from the slightly older generation. Yeah. That's kind of who's playing in that space right now. Yeah, no, exactly, and it's just one of those things, right? You've got to find a way to make money in this market, and as interest rates are going up, what do you suppose? Do you find that prices might start getting pinched because people can't afford it anymore?
Well, I mean, if interest rates go up, it hits the amount you can borrow. Absolutely. Yeah. So that's going to happen. And that's he's pointed out the supply issue, so it's right. And that's what I'm curious about. If these extra rates are coming out in October 24th, you said most likely will be the next one. But then the 3 rates that we're expecting next year, is that going to affect negatively, or do you think the supply and demand, like Carl was saying, offset it? No, I mean,
I think it will. There'll still be a segment that will probably be pushing through and doing well, but honestly, the B20 rules that came into effect on January 1st, so the technical term of that, OFSI, which regulates the mortgage industry, everybody knows the stress test, the 2%, right? Yeah. So that applies to anybody who's getting a mortgage through a major bank, non-major bank, like a credit union, alternative lenders, A or B lending. So, nobody would blink at a contract rate of 3 or 4% interest. Let's say we're in the mid 4s next year. That'd be easy to swallow for almost anybody. But when you have to qualify now, let's say 4.5, you're qualifying at 6.5%.
Yeah.
And I'm sorry, salaries and income just haven't risen that fast.
No.
So you have to look to see where things are going. It just kind of makes me think back to 2 summers ago when the number one thing before the rules came in, it was the baby boomers who were refinancing their houses left, right, and center for 2 reasons. One, they were adding equity to their house because they were finishing basements, doing landscaping, that type of thing. But the basements really were for their kids who were coming back to live with them because they knew that they wouldn't be able to afford it in the future.
Yeah.
Right? I mean, that's kind of a trend that's been going on for a while, but that's a reality of the market, right? So people want to get out. That's millennials' number one wish: get out of mom and dad's basement and get their own house.
No kidding. And the rate this is going, it's getting harder and harder to get out there. When you're you pay anywhere from I saw a stat. I'm trying to think what it was. It was the average condo or average 1-bedroom apartment in Toronto was something like $2,500 a month. Mm-hmm. That's a significant amount of money.
It is. But you go out to the suburbs and you pay less, but you got to commute. So what's your time worth?
Yeah. Right.
There's a cost associated with that. So you got to factor all those things in. But I mean, housing it's increasing.
Yeah.
And rates are going up, and the U.S. is booming right now at a pace that Canada is not. Yeah. So their rates are going up. There's definitely some issues coming up here.
Yeah, and people have to be aware of it as well because it is a changing landscape.
The thing is, with Toronto, like you already mentioned, when people come here, whether it's immigration, immigration, where do you want to live? A lot of people, no disrespect to Calgary, but most people want to come to Toronto, Vancouver, where else do they want to go?
No, exactly.
So you almost look at Toronto, it's like an island.
Yeah.
You know what I mean? Mm-hmm. Like people want to live on an island.
If we can get my ND up, I just want to switch over here really quickly. Matt Dyck, we can be looking into your services and what you're doing. This is, I believe, your website.
Yeah.
Right here.
Yeah.
Different aspects of what to look into because this is an important area for so many different people. It's an important area to learn about. Mm-hmm. And for people looking, they can always reach out to you and get on a call or email, whatever way you'd like, and start looking into this a little bit more.
You can find me, whether it's mattdyckmortgages.com or on my Facebook page, or just Google me and you'll find me. But it is important because there are products out there. As much as it's difficult, we're talking about the new rules. There are some loopholes.
Yeah.
People should take advantage of them.
Matt can get it done.
Yeah.
And do you want to plug your better half?
Sure, yeah, my wife is a prominent real estate agent out of Oshawa, Royal LePage Frank. Her name's Roxanne Meek. And she also works with a custom builder out in Whitby. So, she's been tearing up the market this year. And it's...
What builder does she work with?
DeNoble Homes.
Okay.
DeNoble Homes out of Whitby, they're a semi-custom builder. And they do. They typically just build in Whitby, and they're well sought out areas, right? So they're
nice.
Yeah.
Do you know off the top what the average price of a detached home in Vancouver is?
I don't know off the top of my head.
Expensive.
Is it more or less than Toronto?
It was always more.
Yeah.
Yeah. So and the funny thing is when you start comparing the types of detaches in Vancouver versus Toronto, when you looked at value, you'd be surprised about what you're looking at for that dollar value in Vancouver. Yeah. It typically wasn't, something that would, floor us if we looked at it.
No, absolutely.
But it's just the value was there, and it's still there. So it's an interesting market out there for sure. But I was going to say there for people who are out there looking and they're worried about the stress test, things like that. One thing that people forget is that that's a federal guideline, and So there are provincially regulated financial institutions like our credit unions. And some of the non-bank lenders have now gone out and sourced provincial funds that they can now step aside and just qualify you at the contract rate.
Yeah.
So, you're gonna pay in the low fours, low to mid fours, but you're not qualifying with an extra 2% on top. And so that might make the difference between you getting that property, whether it's an investment or whether it's for your family.
Well, hey, I appreciate your time coming out here and going over these different elements, because these are
absolutely.
things that a lot of our viewers, who doesn't either own a house or looking to buy a house. So I appreciate. We'll be sure to get you back on the show as well.
I wanted to ask one more thing. So in regards to investing,
Yes.
if I wanted to invest into mortgages, right, that's possible?
Absolutely. A big part of what's going on since all these new rules is a lot of private lending, and you can also get into a MIC. So that's a mortgage investment company.
An Irish one?
Potentially, yes. And you can definitely get into those, and there's different ways, and I don't know all the exact details. The brokerage that I'm affiliated with actually created a MIC last year, and you could go into your portfolio of your RSPs, whatever you might have, and actually then buy into the company. So you're funding mortgages. It's very different than it's not the syndicate mortgage pool. It's not that. It's a much safer investment vehicle, and you're looking for stable properties to invest in, whether it's long or short term. But they're great vehicles. And private lending, short-term private lending is very lucrative if you know how to do it.
Perfect.
There is a cannabis REIT out there too, which we'll talk about on a later segment.
Perfect.
But you can get into that.
Well, hey, let's switch gears over to cannabis. I want to thank you again for coming down to the studio and putting up with a fire alarm earlier when we were here, here before.